Bitcoin versus money. What is Bitcoin? Get ready to level up your financial game. You want to know what Bitcoin is? Well, let me break it down for you. Bitcoin, the OG cryptocurrency, burst onto the scene in 2009, revolutionizing the way we think about money. It's a decentralized digital cash system that bypasses traditional middlemen like banks and governments, giving you more control over your hard-earned moolah. Imagine a currency that's digital, decentralized, and democratized. That's Bitcoin in a nutshell. It's like cash, but instead of physical coins and bills, it exists solely online. And the best part? It's not controlled by any single entity, making it a game changer for transactions and investments alike. Satoshi Nakamoto, the mysterious mastermind behind Bitcoin, launched this groundbreaking concept, and it's been making waves ever since. Today, Bitcoin remains the most valuable and influential cryptocurrency out there, paving the way for a whole new era of digital currencies. How does Bitcoin work? Listen up. You want to know the secret sauce behind Bitcoin? Let's dive in and explore how this digital dynamo works its magic. Imagine a digital treasure chest where each Bitcoin is a shiny, golden ticket waiting to unleash its value. You can stash your Bitcoins in a cryptocurrency exchange or a digital wallet, kinda like a virtual piggy bank. Here's the cool part, each Bitcoin is like a precious gem, but you don't need to own the whole thing to get in on the action. You can snag a slice of the pie, owning partial shares of each coin. It's like buying a piece of a rare, digital art piece. Now, meet the smallest denominations of Bitcoin, the Satoshi. This tiny titan is named after Bitcoin's mysterious creator, Satoshi Nakamoto. Each Satoshi is equivalent to 100 millionth of one Bitcoin. Talk about precision. So, what does this mean? It means you can own a tiny piece of Bitcoin, like 0.000000001 BTC, and still be a part of the crypto crew. Fractional shares of Bitcoin are the norm, and it's easy to get started, no matter your budget. Let's break it down, how Bitcoin works. The magic of blockchain. Imagine a super secure, digital ledger book that keeps track of every Bitcoin transaction ever made. That's basically what blockchain is. It's like a public notebook that's shared among all Bitcoin users, and it's kept up to date by a network of computers working together. Here's how it works. When a new transaction is made, it gets added to a block of other transactions. Once that block is full, it gets chained to the previous block, creating a permanent and unalterable record. This way, everyone using Bitcoin can agree on who owns what, and we can trust that the records are accurate and honest. Private and public keys, unlocking transactions. When you use Bitcoin, you need a special set of keys to make it work. Think of it like a super secure safe. Your public key is like the address on the safe, where others can send you Bitcoin. Your private key is like the combination to the safe, which only you know. You use it to unlock the safe and make transactions. When you want to send Bitcoin to someone else, you use your private key to sign the transaction, kind of like signing a check. This proves that you own the Bitcoin and that you're sending it to the right person. Bitcoin mining, verifying transactions. So, how do we make sure that all these transactions are legitimate? That's where mining comes in. Mining is like a digital detective work. Special computers on the Bitcoin network, called miners, work together to verify each transaction. They make sure that you can't cheat the system by spending Bitcoin you don't have, or trying to spend the same Bitcoin twice. These miners use powerful computers to solve complex math problems, kind of like a digital puzzle. Once they solve the puzzle, they get to add a new block of transactions to the blockchain ledger. This process creates a permanent record of all transactions, and it helps keep the entire Bitcoin system honest and secure. That's the magic of Bitcoin. The money revolution, why we need to change the way we think about cash. Imagine a world where paying for things is fast, cheap, and easy for everyone. That's the promise of digital money, a future where we can make transactions online or with our phones, just like we do with emails or texts. But there's a problem. The way we're going about it now could create a huge divide between those who have access to digital money and those who don't. This is especially true for people who don't have bank accounts, like migrant workers who send money back to their families. Right now, when we use credit cards, we're often charged extra fees that can add up quickly. And when we send money abroad, we often face high transfer fees and poor exchange rates. This can make it harder for people to start businesses, access financial services, or even just send money to their loved ones. That's why policymakers need to think beyond just the technology and focus on creating agreements and standards that benefit everyone. We need to make sure that digital money is accessible, inclusive, and transparent. 2 examples can inspire us. 1. The Internet. Remember how the Internet brought uniform standards that allowed different companies and technologies to work together seamlessly? We need something similar for digital money. 2. National payment systems. Take a look at how countries have set up their own payment systems, like interbank networks and currency markets. We can learn from these examples and create something similar for digital money. By taking these steps, we can create a system that's fast, cheap, and easy for everyone. We can also make illegal transactions harder to hide and bring more transparency to financial transactions. Most importantly, we can ensure that everyone has access to the benefits of digital money, regardless of their background or financial situation. That's why we need to prioritize creating a level playing field for all. So, let's work together to create a brighter future for digital money. Let's make paying for things easy, affordable, and secure for everyone. The future of money is digital. Are we ready?